I would have to attribute a lot of the recent volatility to the coronavirus, but certain factors that are inherent to the recent run-up, I think, have to come into play. Um, on a recent segment that I did on one of the finance shows, they asked for a word of the day, and I gave that word of the day as contagion. And it wasn't necessarily contagion only from the physical form of an illness, but also the contagion of ideas or contagion of fear. And I think when you get a visceral fear, a fear that's outside the market's real ability to model something, such as a virus that could be potentially lethal, that gets into the market psyche, and that does cause volatility. You get overreactions, panic, and then sometimes you still have the dip mentality in place because, as we've discussed various times on here, bad news in an otherwise upward trending market gets a buy the dip reaction at some point, and that reaction can sometimes overshoot in its own way. And so I do think the coronavirus is very much in the news and very much a cause of a lot of the recent moves that we've seen. But let's put it in perspective. We really haven't seen moves of this type. We had a 1% down day on Monday. That's really not all that big or all that meaningful in the grand scope of things. It hurts if you're long, and when I say 1%, it was over 1%. It hurts if you're long, especially if you're long on margin. It does bring up the subject of perhaps it's better to be reminded of what your risk parameters are before you get into trouble in a day like that. But that becomes the sort of action reaction cycle that you get into, and a lot of this though was because the market had been so quiet, because we had been sort of in this general uptrend. There's an old saying that the markets take the stairs to the attic and the elevator to the basement. I'm not going to say that we took an elevator to the basement. We took the elevator down a floor or two, over Friday to Monday sessions. But when you've been on this gentle climb up, that means that people have been more and more accepting of risk, more and more likely to own risky assets, and more and more likely to be fully invested. And when you get into that situation where people are long a lot of risky assets, fully invested, not necessarily hedging, that's when you get into trouble because it doesn't take much to unwind that sort of event. Others have sort of said, a lot of times the worst corrections don't actually have a reason at first, and then the reason's attributable later. I don't know that that's the case here, and we certainly haven't had what I would call anywhere close to a full-fledged correction. But in the short term, yeah, the virus, I think, got people fearful when the balance had been much more toward greed than fear. When the market resets that fear-greed imbalance, you get volatility, and that's what we've seen. And as I've said, it's far from egregiously large, but it does actually at least put a little pause in the market's narrative of ever upward in a fairly straight line.